Bond yields continue to decline, as we saw yesterday on Veterans Day. We saw a big decline in yields. Likewise, that followed through today. Maybe not as much as we saw yesterday, but the momentum is still there. We aren't seeing a reversal, despite the fact that we're seeing an uptick in stocks, despite the fact that we're seeing upticks in other commodities, but we're not seeing it in bonds. Bond yields continue to go down, and that's an idea that maybe there's something else out there that the market isn't really being vocal about, but sees concern. And if we look at volatility, market volatility in the Treasury sector, we are seeing a modest uptick from Friday's close and yesterday's close. However, it's still below the 14-day moving average, but elevated on a macro level. So volatility's not screaming, but running high as we see yields continue to decline. Now let's look at what we have ahead here. Tomorrow we have Fed Chairman Powell speaking. He is going to touch on a few different items. Monetary policy, likely not one of them, but he is going to talk about the economy. So that will be one thing to look for tomorrow. Also, we have CPI coming out. Obviously, that's not the Fed's favorite number, but it certainly is one that we will watch, as higher inflation could mean more aggressive Fed action in 2019, something the market is still very much up in the air about. We are looking for right now 2 hikes into early 2019, but that doesn't mean we're going to get them, and it certainly doesn't mean we're going to get 2 more in late 2019. And lastly, there are some major concerns going on in Europe, whether you're talking about Italian budgets, whether you're talking about Brexit concerns. Yes, we did get sort of the status quo today, that things are looking okay, but they still have to go to specific votes, and they still have to be confirmed, and nothing is ever confirmed when you hear it on a headline. You have to wait and see what happens in the follow-through. And so right now, the bond market may be saying, maybe the EU and Italy, maybe the EU, European Union, and the UK haven't really found it yet, or at least it wants more confirmation. And I think that's another reason why we're seeing lower yields in treasuries and higher implied volatility, kind of bucking that trend. Recall late last week we were trading close to 3.25 yield. We're 10 basis points lower than that on very little financial news. We're seeing more fundamental news that came over the tape, obviously with Europe, and obviously things going on with the trade war continuing, whether it's heating up or cooling down. It depends on what time it is during the day. So right now we're seeing mixed reactions from the market in general, but ultimately the bond market's telling you there's something going on, and possibly part of the reason for this flight to quality.